A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Now we're going to talk about the best and unfortunately the worst of country ETFs for 2015 with our ETF research director Nina Mishra. And one of the things that I'm noticing is that emerging markets are back in focus.
Yes, it seems they are back in favor with investors. Last month in January, investors put 18 billion into emerging market stocks and bonds. And I think it's mainly because of uneven growth in developed markets and some concerns about stock market valuations as well. So maybe investors are returning to emerging markets in search of higher growth and more reasonable stock market valuations. And this year, in fact, broader emerging market indexes are outperforming the stock market indexes here in the US. And I would like to add that with this collapse in oil prices, the emerging market investing landscape has undergone a change. So countries which are beneficiaries of cheaper oil are expected to do well. And the countries which are hurt by cheaper oil, they will obviously perform bad this year. So
investors may be better served to look into some emerging market ETFs.
Yes, and in particularly the ETFs which benefit from cheaper oil, like India ETFs.
Yeah, there's a bull market in India?
Yeah, India was one of the best performing markets last year, but the outlook still remains positive. And India is one of the major beneficiaries of cheap oil because India imports about 80% of its energy needs.
I see.
So the decline in energy prices has helped the country narrow down its budget and trade deficits and also bring down inflation. And with easing inflation, the central bank last month surprised the markets with a rate cut.
Yep.
And yesterday they announced a cut in the bank's reserves, the reserves that banks are required to maintain. And if inflation stays low due to low oil prices, then they are expected to cut rates further, which in turn will boost growth and earnings growth of companies there.
And yesterday, February the 3rd,
Yes,
right, for those
exactly.
people who need a calendar reference. All right, so Wisdom Tree has an India ETF.
Yes, this is the most popular equity ETF in India. The ticker is EPI, and it tracks the performance of profitable companies in India. The expense ratio is 83 basis points. It is up almost 50% in the past 1 year because stocks there have performed very well. And the currency has remained quite strong. It's one of the very few currencies which has done well against the dollar in the past 1 year. And it's a Zacks rank 1 strong buy ETF.
Now you say more pain ahead for Russia.
Yeah, Russian economy is an oil-dependent economy. They generate about 50% of their revenues from oil and natural gas resources. So obviously this oil-dependent economy has been battered by this collapse in oil prices and also the Western economic sanctions due to the situation in Ukraine. Their credit rating was downgraded to junk by S&P recently.
That's never good to hear.
Never good. And the currency has also collapsed. The ruble is down almost 50% against the dollar in the past 1 year. And they now expect the economy to contract about 3% this year if oil prices stay at around these levels.
So Market Vectors has a Russia ETF?
Yeah, the ticker is RSX, which I think I forgot to put over there. It's the largest Russia equity ETF, charges an expense ratio of 63 basis points. It's down about 39% in the past 1 year, but we may see more pain ahead for this ETF. It has a Zacks ETF rank of 5 or strong sell.
Now, do you own either of these two?
No, I don't.
That's kind of a loaded question, I guess, right? All right, thanks for that. And don't forget, you can get a shot at more ETF information on our website, Zacks.com, in the ETF section of the site. So if you're not there already watching this video, all you need to do is go to the home page and navigate to the ETF section of Zacks.com using the Funds tab at the top of the home page. Also, don't forget, you can follow us on Facebook at facebook.com/Zacks Investment Research. with Nina. I'm Terry Ruffalo.